Tesla just told everyone it had a great few months. Profits went up, but the stock barely moved. Wall Street called it a comeback. And here's the strange part. There is one line in Tesla's own report that keeps getting smaller, and Tesla didn't mention it once on the call with investors. Last year, that one line made Tesla $595 million. This year, only $380 million. $380 million is still a giant pile of money, and it used to be one of Tesla's best tricks for making cash. What's killing it tells you something most Tesla owners have no idea about. Let's open the report. First, the good news, because there was some. Tesla makes electric cars that run on a battery, not gas. In the first 3 months of 2026, Tesla took in $22.39 billion in total sales. That's all the money it brought in, and that's up 16% from a year before. Profits went up too, a lot, on paper. So the headlines were happy. CNBC ran the bigger profit number. Most of the news did the same. The story everyone told was simple. Tesla is back. And Tesla's boss, Elon Musk, told an even bigger story. He spent most of the call talking about robot taxis and walk-in robots, cars that drive themselves, robots that do chores. The message was clear. Don't look at this quarter, look at the future. But here's the thing. That happy comparison is a little bit of a trick. A year earlier, in early 2025, Tesla had one of its worst stretches in years. It shut down its factories to switch to a new car. So almost any number this year looks great next to last year's mess. It's like getting a C on a test right after getting an F. Better, but still not an A. And then there are the cars themselves. Tesla actually sold fewer cars than Wall Street expected. It delivered about 358,000 cars. The experts had guessed about 365,000 cars. It came up around 7,600 cars short. Tesla also built about 50,000 more cars than it sold. Those extra cars are just sitting in lots, waiting for buyers. So it's hard to call that a booming car business. Which leaves a simple question. If Tesla sold fewer cars, where did all that extra profit come from? The answer starts with that shrinking line. Let me show you what it actually is. The government has rules about pollution. Every car company has a pollution limit it's supposed to stay under. For years, if a company made too many gas cars and went over that limit, it had to pay the government a fine. But there was a way to dodge that fine. The company could buy something called a regulatory credit. Think of it like a permission slip for pollution. And who had tons of these permission slips to sell? Tesla. Because Tesla only makes clean electric cars, it earned piles of credits it didn't need. So Tesla sold them. Big gas car companies paid Tesla real money just so they wouldn't get fined. Picture a kid in class who's allowed to chew gum. The kids who aren't allowed pay him $1 each for a note that says they can. He didn't do any extra work. He just had notes the other kids needed. That was Tesla, except the notes were worth hundreds of millions of dollars. Now here's the part that matters. Those permission slips cost Tesla almost nothing to make, so nearly every dollar from selling them was pure profit, and it added up to a fortune. Since 2019, Tesla has earned about $10.6 billion just from selling these credits. $10.6 billion, that's $10.5 billion for permission slips. And its best year, 2024, the credits brought in $2.76 billion, all on their own, in a single year. That's enough to buy a small airline, just from selling slips of paper. Now here's how important that was. Go back to early 2025. Tesla's credits that quarter were $595 million, but Tesla's profit from everything else was too thin that without the credit money, Tesla would have actually lost money. So read that again. The thing keeping Tesla out of the red wasn't cars, it was permission slips. Management didn't put that on the billboard. Imagine that. And that isn't the secret only I spotted. The government's own market watchdog spotted it too. A few years back, the watchdog wrote Tesla a letter with a simple question. It asked why Tesla tucks this giant pile of pollution credit money inside its normal car sales number, where it's hard for you to find. The credits cost almost nothing and changed the whole profit story. So why hide them in with the cars? Tesla wrote back, explained itself, and kept doing it the exact same way. Sure, now here's where it gets harder to explain away. Look at the credit money over the last year and a half. $692 million, then $595 million, then $439 million, then $417 million, a little bounce to $542 million, and now $380 million. Same cars, same company. The easy money is almost gone. And remember, this money was nearly all profit. So when it shrinks, it doesn't just trim sales a little, it cuts straight into the bottom line, the actual profit Tesla gets to keep. So if the credits dropped by $215 million in a single year, and the car business didn't boom, how did Tesla's profit go up at all? This is where it gets interesting. Tesla used a few one-time helpers this quarter. A one-time helper only works once, like finding a $20 bill in an old jacket. It's nice, but you can't count on it next month. Here's one. A warranty is a company's promise to fix your car for free if something breaks. Tesla keeps a big pot of money set aside to pay for those repairs. This quarter, Tesla decided it could set aside less, so it moved some of that money over into profit. That makes profit look bigger, but it's not from selling more cars. Tesla also got a one-time boost tied to import taxes, and it waited longer to pay the companies that supply its parts, which keeps more cash in the bank for now. Tesla called these one-time benefits in its own slides. But here's the catch. Tesla never said how big those one-time benefits were. Not in dollars. Nobody outside Tesla knows how much of this great quarter was real and how much was these one-time tricks. That's a strange thing to leave out. There is one trick worth knowing about. There are two ways to count profit. One way follows the strict rules and counts every single cost. The other way lets the company leave some big costs out. By the strict rules, Tesla earned 13 cents for each share of the company. By the looser way, it earned 41 cents. Same 3 months. The looser number is more than 3 times bigger. The gap is mostly one cost Tesla leaves out. The giant pile of company stock it handed to Elon Musk and other staff. More than $1 billion of it in 3 months. Tesla likes to show its profit the looser way, with that cost taken out. So the number in the headline is the prettier one. So why is the credit money drying up? It's not bad luck, it's the law. Remember the fine? The fine gas car companies had to pay if they polluted too much. The government got rid of it. No fine means no problem, and no problem means no reason to buy Tesla's permission slips. So the buyers are walking away. About 3 out of every $4 Tesla made from credits were tied to that one fine. The experts who study this think Tesla's credit money could drop all the way to zero by 2027. Gone. The whole thing. Not because Tesla did anything wrong, because the rule that made it work disappeared. And here's the full picture. For years, Tesla's most profitable money didn't come from building cars. It came from selling pollution permission slips that cost almost nothing. That money is now dying by law, and it's not coming back. This quarter, Tesla covered the hole with one-time tricks. It released warranty money. It got a tax boost. It paid its suppliers slower, but those all work only once. So the comeback everyone cheered is leaning on two things. One is disappearing forever, the other can't be repeated. That's the part the headlines missed. The car business itself, the thing Tesla is supposed to be, sold fewer cars and stacked up a pile of unsold ones. So if you own a piece of Tesla today, here's what you're really betting on. You're betting Tesla can build a brand new business, fast. Self-driving taxis, walking robots, big exciting ideas. Ideas that so far barely bring any money at all. You're betting the new dream shows up before the old easy money runs out. And right now, the old easy money is leaving faster than the dream is arriving. When the credits hit zero and the one-time tricks run out, Tesla is left with just the cars. And right now, the cars alone aren't carrying the profit. That's the real story in the filing. Not a comeback, a countdown. So here's the one sentence version. Tesla's easiest, most profitable money is being shut off by the government, and the quarter that looked like a comeback was propped up by one-time tricks Tesla won't put a number on. Here's the simple truth underneath it. A real car company makes its money selling cars. For a long time, Tesla made a huge chunk of its money selling permission slips and one-time tricks instead. That part is ending. What's left has to stand on its own. So what should you watch next? Watch the credit line in the next few reports. If it keeps sliding toward zero, the clock is running. Watch whether Tesla ever tells us how big those one-time benefits were. If it stays quiet, that tells you something too. And watch the cars. Watch whether Tesla can sell more of them at a real profit with none of these helpers. That's the only number that truly fixes this. Now, I want to know what you think. There are two ways to read this. 1. Tesla is a car company that leaned on easy money, and now that easy money is ending, it's in real trouble. 2. Tesla stopped caring about credits a long time ago. It's betting everything on robots and self-driving cars. And these credits were always going to fade anyway. Which one are you? Drop it in the comments and tell me why. And if you want the full walkthrough, every number in this video, the actual filing, the exact figures, and where each one comes from, that's what Footnote Brief is. The link's in the description and the pinned comments. It's free.